has fallen about 2.5% after those numbers came in. We have numbers, of course, from the asset management arm also coming through right now. 38% rise in revenue, 32% rise in profits. So that's looking like a steady clip. But let's focus on the insurance arm, HDFC Life, which is where the cut is now about 2.5%. Let's straight away go across to Yash to first understand the fine print, and then we'll get Deepan's take on it as well. Yash, over to you.
So, Surbhi, if you look at the numbers have been good on all counts, but what is hurting the stock and the sentiment today is the number that the company has published on the margin front. I'll take you through the four most important parameters. The first one is new business premium. That has come at about 8,097 crore rupees rather. Our poll was 8,167. It's grown by 14% in the second quarter. The total annualized premium equivalent and retail annualized premium equivalent has far outpaced the poll that CNBC-TV18 was working with. So, of course, it's grown at a pace of 27% for total APE and 31% for retail APE. As I said, both total APE and retail APE much ahead of the poll that the street was working with. Value of new business is slightly missed the poll. We were working with a number of about 958 crore. What has come through is a number of 938 crore. So the market could have been happy with all these four important points. What has hurt the stock today and the result is the margin number. The margin number has come at about 24.3%. We were working with a number of 25.37%. Now, why is this important? The management in an interview to CNBC-TV18 has guided for 26% margin plus minus 100 basis points for FY25. In the first quarter, they did 25% margin, which did fit in that, the bracket of 26% plus minus 100 basis points. Here, this time around, the margin slipped out of that bracket, coming in at about 24.3%. Hence, that is something which is concerning the street. On an average, if you see first quarter and second quarter itself, 24.65% is the average margin for the first half of FY25. So, of course, it's slightly on the verge of that bracket which has been given by the management as guidance on the margin. And hence, that is something which is worrying the stock today.
Okay, all right, Yash, thanks very much for that. And I'm sure in your conversation with the management, we'll try and get some more color into what's the issue. Why this extent of margin pressure and why they have slipped from the band that they themselves had guided, as Yash is pointing out.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.